Hey guys, welcome back to another Forex market preview video. My name is Akil Stokes, Forex trader and head trading coach over at TradeEmpower.com. If you have been one of our loyal subscribers that have been with us for years and years and years, I just want to say thank you. I appreciate the support every time you guys leave a great comment, hit that like button, and of course, share these videos. It's a massive help to us. We've been able to grow this channel to close to 89,000 subscribers, and you know what? I'd like to hit 100,000 before summer. So before June gets here, I'd like to see if we can get to that 100,000 subscriber mark. So keep doing what you guys are doing. The support is great. Now, in today's video, we're going to do something a little bit different. There's not much out there on the charts that I like. So I want to take some time to do really a training lesson and address some of the questions that I've been getting from some of you guys. Now, you guys know that a couple weeks ago, we did our Ultimate Trader Transformation Trading Workshop. It was a 3-day free trading workshop that we did before kicking off our new training course, the Ultimate Trader Transformation course, right? And we did a lot of teaching on a lot of subjects. We did a little bit of advanced pattern formation, back testing, money management, trading psychology, and really the basics of reading a price chart. So some of those basic elements of determining trend, looking at structure, even a few strategies to get involved. And of course, the issue always is whenever we do a training like that, we say, hey guys, understand that you're not going to be able to learn everything in 3 days. So don't go out and try to use this. We like to say this around the office a lot. You know, when we do these type of videos on YouTube and people watch them and think that, hey, this 10-minute video or this 20-minute video is going to turn them into a super trader, we say that you only know enough to be a danger to yourself, meaning you only know enough to think that you know everything, and then when you go out and start trading it live, you lose money. And I've seen a few traders do that after our training workshop where we've taught them how to identify a trend. They've hopped right into the market and started trying to become trend traders, and unfortunately, they've been getting eaten alive. So I want to walk you through a scenario that a few of these traders have been going through because I'm sure they're not the only ones. They just may be the only ones that reached out. And it's an interesting scenario that happens during a trend. And you're going to understand this when you get more experience in the market. But, you know, when we're drawing stuff out and doing examples, typically examples always look perfect, right? So if we're looking at a potential bullish trend here, we're looking at this, right? We have our initial starting point down here. We have our initial structure high. So let's just type this in for review. This is going to be our starting point. And my apologies in advance if I can't spell anything. I'm a trader, not a speller, right? And this is going to be our initial structure high, right? So this is the first part of the move of identifying a trend. Then we have what's called an outside return. Now, if you remember in the workshop, I said there are many words you can use for this. I use outside return just because that's how I was taught, but this is the same thing as a pullback, a retracement. Some may call it relief as well. You know, whatever you want to use is fine as long as you understand what it is. We then, when trending, follow that move up with a new structure high. And this type of 3-point move, new structure high. Told you I can't spell. There we go, new structure high. This type of 3-point move establishes our trend. So 1, 2, 3, right? 1, 2, 3. Extension, pullback, extension, extension, pullback, extension. And as long as we're continuing this pattern of essentially lower or higher lows, right? Higher lows right here, boom, boom, and higher highs right here, boom, boom, boom. We have a bullish trend, right? And as a trend continuation trader, what you're looking to do is you're looking to get positions on the pullback. So you're looking for the market to retrace. You're looking to get involved somewhere on this pullback, and you're looking to trade this up in advance of that new extension. You're looking to hop on that extension. Well, here's the issue that some traders are having, right? So let's say the market just put in a new structure high right here. The next thing you would expect, or the next thing you would predict, is some type of relief, and you would expect an outside return. And I'm going to walk you through kind of what's going through a trader's mind, because again, I've been here. People ask me all the time. Again, I've had some years now in trading, but so many of you weren't with me from the beginning. But people ask me all the time, Akil, it always seems like you're in my head, right? It seems like you know exactly what I'm thinking. Stop watching me, right? And the reason I do that is because I started off just like you guys. Understand, I didn't just come out a good trader, right? I was pretty bad for a pretty long period of time. The difference is, and there's two ways you can handle being bad and making mistakes. Is one, you can push the blame somewhere else. So you can blame something else like the broker, the market makers, the news, Donald Trump, right? You can shift blame wherever else and say, oh, it's Donald Trump's fault that I lost because he said this. Oh, it's the broker's fault because they were hunting my stops. Oh, it's the Trader B's fault because he told me this, right? You can shift blame and never accept blame for yourself, and you'll continue in that downward spiral of failure because you're never willing to make any changes. Or you can use your mistakes as a learning experience, right? The market teaches a lot of lessons, right? The market is its own training course. For some, it can be a very expensive training course. And what I mean by that is, whenever you make a mistake, right, if you accept the blame, if you work on fixing that mistake, it's something that you're going to be able to use for the future to better yourself. And unfortunately, before actually taking a training course, I spent a lot of time paying the market for training lessons. And, in that time, I learned a lot. And, so what I tell many of the traders that I work with is that, hey, there's probably nothing that you will do that I haven't already done. So I'll have some type of insight for you. Now, whether you follow it or not, that's up to you. You're still going to make your own mistakes, but I've pretty much made every mistake you can think of. And here's one I used to make as well. So I'm a trend continuation trader, and I'm looking for that pullback, right? I'm looking for this outside return so I can hop on the next extension and make lots of money. So the market does something like this. The market pulls back, right? And I say, you know what? This is it. I'm going to buy right here. Right, so I put on my buying orders, right? I buy it up, this is just for a general sense, so don't worry about how we're buying it, if we're doing a buy limit or if we're waiting for a double top or double bottom or a lower, higher high, higher close, whatever it may be. It doesn't matter. This is just the general principle, right? You're buying on the pullback. Let's make this orange works. Now let's do gold. I like gold, right? Let's make it gold for buy. And we're anticipating, right, a move up to at least a retest of previous structure here. Let's keep target simple. So we'll copy and paste this. And we'll say that this is where we're looking for with targets. Let's make that green for money, potential money, right? Make this green. Boop. And we're putting stop losses, right below here, right? Very, very small stop losses. Say we have a 2-to-1, an average 2-to-1 risk reward. So stop loss is somewhere like this. And we'll make that stop loss red, right? So you guys would agree, pretty decent trading opportunity. You're looking to get involved in a pullback, right? Look left, structure leaves clues. We came right into our previous structure high, essentially. We've got a very nice risk reward where we're risking, it looks like less than half for our potential reward. And if you're someone that's taking extended targets, again, we'll keep it simple for these purposes. But if you're someone that's taking extended targets, you're predicting the extension even higher, which would give you even a bigger risk reward. But again, we'll keep it simple. And so you buy it up, right? Right there at the gold line. Price action comes up here and you're starting to get excited, right? You're rubbing your hands together saying, oh yeah, we're going to catch this extension. Pip daddy, here I come, right? You're counting the money. You're calling the wife up. You're calling the girlfriend up and you're saying, hey babe, where do you want to eat tonight? Because I'm going to have a good day in the market. You can get extra cheese on that burger if you want. Supersize the fries even, right? You're feeling yourself. You're feeling good. And then, right, of course, this always happens when you're feeling your greatest, right? You then come back and you see the market does something like this. And you're like, oh, stopped out. The market faked me out. It went halfway to profit. It came back down and it stopped me out for a loss, right? You're feeling bad. I almost had it. What did I do wrong, right? So now you're a little bit upset. You already promised the wife this meal. So you're like, okay, well, I gotta get some of this back. I gotta get some of this back. And you see that, of course, right? Because this always happens. As soon as the market stops you out, what does the market start to do? Right? You guys know, type it in, or we're not in a live room. You can type it in the comment section if you want. Type it in. What does the market always do after it stops you out? It starts to reverse, right? It starts to reverse. And now the trader sees this move and they see what? Okay, well, I was wrong on the long opportunity. I wanted to get long. I wanted to buy, get bullish right here. And I was wrong. And the market is now putting in a downtrend, right? Because Akil said, here's the move, right? You have your initial starting point. You have your initial structure low. You've got your outside return. You've got your new structure low right here. We've now got another outside return. I've got to hop on the bearish trend before anyone else gets on it. So what do? Right? You enter, let's do a new line. You enter right here for the short. Change the color here. I know I'm in your head, guys. I've been here more times than I like to admit, but I've been here, right? You enter short right there. So you're selling it this time. Now your stop loss is up here, right? You're still getting a good risk reward. And your target is down here, right? Another 2-to-1 risk reward. And you're saying, okay, well, I'm going to make this money back. I'm going to get it back, right? And then, of course, what does the market do? It continues straight up like that. And you're like, it doesn't make sense, Akil. It doesn't make sense. I identified the bullish trend and I tried to get bullish and then we went bearish. And then I identified the bearish trend and I tried to get bearish when we went bullish. What am I missing, right? Have you guys ever been there before? I'm going to put a poll question in the top right hand of your screen. Tell me if you have ever been in this type of scenario, right? Simple yes or no poll question. Tell me if you have ever thought like this. You identify a bullish trend, you try to get bullish, it goes bearish. You identify a bearish trend, you try to get bearish, it goes bullish, and you just feel completely lost. You're out of everything. You're one step behind every time. Let me know if you felt like this before, right? I'm gonna go and gotta upload this first. I'm gonna click yes. Well, here's what's important to understand about this. This scenario right here actually has a name, right? This little move actually has a name. If you guys that are familiar with Elliott wave theory, this is going to be very important or very familiar to you. And, a little off topic. I did get a question on Instagram the other day, right? Out of all places, Instagram. Got a question about Elliott wave theory and do I use Elliott waves? And whenever I get asked that question, I always say yes and no, right? Yes and no. I don't use Elliott waves as far as counting waves. So I don't, you see Elliott wave counter say 1, 2, 3, 4, 5, ABC, 1, 2, 3, 4, 5, ABC or ABCD. I don't do a wave count such as that. However, in the way that I analyze the charts and really this type of movement, there is Elliott wave principles and Elliott wave theory in there. So I'm not an Elliott wave hater for all you guys that think I am. I don't hate on Elliott waves. I don't personally believe in doing a wave count because I believe there's a lot of subjectivity in where your wave 1 is, where your wave 3 is. It's going to be we put 100 Elliott wave traders in the room, you'll probably get 80 something answers on which wave is which if you're looking at the exact same chart. So for me, I've never bought into that part of it, but I do understand that Elliott wave theory works in the market and how it moves. And this part right here is essentially called a complex pullback. This would be the ABCD correction in your Elliott wave theory. And what I mean by that is a pullback isn't always straight, right? You look at a chart like this, we draw it out, and many newer traders are under the assumption that a pullback is a straight, direct, smooth move that comes back. Well, we know that the market works in something called fractals. And what that means is that the market moves the same but on smaller and smaller levels. So sometimes within this pullback, there can actually be opposite trends, right? And sometimes we'll see something called a complex pullback and a retracement, which means instead of just having a straight move down, the market puts in an ABCD pattern, sometimes maybe even a 3 drives pattern, while still remaining in the same overall trend. Now, unfortunately, there's no way to predict this. I can't tell you whether, hey, when market gets here, whether it's going to be a complex pullback or just a 1 move pullback. I can't tell you that. But if you're setting up your risk reward profile the correct way, and if you're consistent, it's not going to really make a difference. And I'll show you how. So let's look at this first trade right here, right? We took the first trade and we're going to measure out a nice little visual for my risk reward, right? Here was my initial risk. Boom, 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 right in here, up in here, up in here, right? Here's my initial risk. Let's go ahead and make this red as well. Here is my initial reward. Again, just a simple retest of structure for targets. Again, don't get caught up too much on, hey, how come targets can't be higher? They can. You can do whatever you want. That's why you back test it, right? Just keep it simple. So we had our risk there, and we're looking at our reward being up here, right? So a very good risk reward. Now let's say we're skunked out of this trade. We take a loss. So in the back of our head, we know that this was the loss we took on the first trade, right? Trade number one. Now let's say we re-enter again. Instead of looking to get short at the pullback, let's say we re-enter again somewhere down here. So we give ourselves a situation where we reload right after whatever move we got, we reload, we get long again, because technically we're still within our overall trend, right? For you guys that joined the workshop, or for you guys that are familiar with our Into the Gray training, right? Technically our outside return is right here. So as long as we don't penetrate this level, we're still in a bullish move. I don't care what happens with these little moves inside here. We're still in a bullish move. And if you're a trend continuation trader, sometimes it means taking a few swing and misses in order to catch the trade. So let's say you're in a move like that where you reload again here, and then you're looking for the same target level. So once again, your risk is going to be very small, right? Because you're a smart trader. You use very shallow risk rewards. And there is a way to do this with using a bigger risk reward. But again, we want to keep these YouTube videos as simple as possible, because then people get confused and people lose confidence, right? So let's say you lose on the first trade, right? You win on the second trade. You're a 50% trader. I know the internet will tell you that being a 50% trader is bad, but trust me, don't listen to probably 3/4 of the people you hear on the internet, right? They have no idea what they're talking about. We'll get into a little bit about that later. But let's say you win the second trade. Well, you took two trades, right? You won one, you lost one. And for many of you guys who are under the impression that you need to be this 80, 90% trader, you're like, oh man, that's horrible, Akil. But when you look at risk reward, right? Would you not like this? Right? So you had one win, you had one loss. Your loss took away this much profit, right? Look at all the profit you have remaining. Is that not a good scenario to consistently put yourself in? Right? So as a trend continuation trader, you have to be willing to sometimes, hey, take a loss right here, wipe it off, right? Reload and take another win. We had a good scenario with this in the live room this week on pound yen. I forgot the actual totals, but I remember I took a loss on pound yen during the week. I think it was maybe a 20 pip loss. And then, minutes later, we got another valid entry reason. And that one ended up winning for about 55 pips. So two trades, and, one got stopped out for 20. The other one won for 55. It's a positive. One win, one loss for positive pippage, which is good. So you want to keep that in mind. You don't have to be a high percentage winning trader, but you do have to be consistent in how you approach the market. Because if you're a trader that looks to get revenge and maybe do the opposite, well, guess what's going to happen? Now you're going to lose on both ends, and you're going to sit back scratching your head on why the market did this. So I feel like I had something else that I wanted to teach, but this is kind of a random video. So that's this type of move is called a complex pullback. Again, it's a normal move in the market. It can happen like this, an ABCD pattern. It can be a three dries pattern and another leg down. But understand, I guess the most important part you can understand is what level violates the trend and what level doesn't. And as long as you're within this previous outside return, right? As long as you're within this level, you can't be too quick to think trend reversal, because sometimes you're just going to get skunked out trying to take revenge on the market. So that's today's lesson. Now, before I head out, I put a tweet out this weekend of a cool picture I saw. I was reading reading some content from a trader named Peter Brandt. Again, Peter, I love using Peter Brandt as an example. He's one of the, in my opinion, one of the best traders of all time. And historically, he has a win percentage of about 40%. Right. So he loses more than he wins. And kind of one of the cool things I've always heard from him is when he does interviews, he's like, hey, you know what? I go into every trade expecting a loser. And they're like, why? Why would you do that? That's a horrible mindset. He's, well, look, statistically, I'm a 40% trader. So statistically speaking, the odds of me losing any given trade are more than the odds of me winning. It's very cool to have that mindset, yet still be confident. And he's been profitable, I think, for the last 20 years straight. So the proof's in the pudding right there. But I read an article by him. Let me just see if I can. I'm going to shoot the tweet up when I do the editing. Let's see if I can find it. I want to read what I actually wrote or what he actually said. It was a cool article called something about the underwater principles, about being underwater. And he said that most long-term profitable traders are underwater most of the time. So that means basically, either in a drawdown or recovering from a drawdown. I said, the dream of novice market speculators is that they will continually bask in the warmth of profitable times. This myth is falsely promised by the promoters of trading systems and training programs. Not us, of course. You guys know we're pretty transparent about our drawdowns here. In fact, just the opposite is true. Most long-term profitable traders spend the vast majority of their trading careers either in a drawdown or recovering from a drawdown. Any slick promoter who tells you different is not dealing with a full deck. And he goes on to explain that a little bit. But I love hearing stuff like that because it's the same message that we promote here. And we didn't invent this message, but our message is a lot different than what you guys see on the internet. Most of the internet is, trying to sell you a false dream, right? They're trying to sell you a false dream. They're saying that you can make millions of dollars. You can do this, you can do that. It's that easy. Everyone's doing it. And it's really not. A great example is I got a comment the other day, right? Some of the trolls, the trading trolls on the internet have returned, right, to follow me on YouTube, which is great. I love the trolls, right? Haters mean I'm doing good. And a guy was commenting on a video I did at the end of last year where I was explaining, I was walking you through our syndicate program returns. And, we did about 99%, basically 100% within the last 2 years. So over the last 2 years in the syndicate, even before putting in any type of money management, we've averaged about a 50% return, which is pretty darn good. And the guy was like, well, how can you only make 50%? Blah, blah, blah. It's bad. And it's like, apparently this guy has no idea what he's talking about. And he said, hey, you know what? I make 10% a week. And I'm not going to get into that. I'm not going to say that this trader doesn't make 10% a week. First of all, it's not my place to judge. I have no idea how much anybody makes, right? So who am I to say that, hey, you don't make this or you do make this? It's not my place. Secondly, nor do I care. I can, it sounds bad, but I can care less what any other trader is doing. Why? Because it has zero effect on what I'm doing. But just I challenge you to do the math, right? Do the math on what a 10% return a week will get you, right? Think about it. You're basically multiplying, there we go, that's the word, multiplying your account by 5 each year, right? So you're taking a $20,000 account and turning it to $100,000 in 1 year. And just ask yourself, how realistic is that? Many of you have been around for a while. Ask yourself, again, that's before any type of money management. Ask yourself, how realistic is that? And judge for yourself. But stuff like that kind of sickens me because there are newer traders out there, and I was one of those traders. There are newer traders out there that fall into that trap and believe it. And then when they trade, they have false expectations. So they may actually be trading well, right? But because they're not living up to the standard of what they think they should be doing, they kind of give up or make mistakes or change systems. And instead of having a nice profitable system, which can give them a good 30% return a year over a long period of time, which I think anyone would gladly take, they're quitting and trying to overtrade and do more than they're supposed to. And that typically ends up in them losing money. So want to bring that up. And, lastly, for you guys that are in the Ultimate Trader Transformation course, I know a lot of you guys have signed up. If this looks familiar, it is, right? I'm not sure if you've gotten to this point yet, right? But if you head over to our training course, I want this over here. Come on. There we go. Get in the middle. I'll do that later. If you head over to the training course, this is going to be very familiar to the Fibonacci inversion trade. Many of you guys are watching on YouTube. You've seen, this is one of Jason's famous videos. Watch the video called craziest trading I've ever seen, right? It's got like like a billion views on it. It's great. But this year in the course, we actually decided to teach this this trade setup. It's called the Fibonacci inversion trade. So for you guys in the course, check it out. It's under module 7. It's not going to be exactly the same as a complex pullback, but the same theory applies. You can kind of go through it and you can kind of see so where's it at? The same type of movement we just looked at in here. So hope you guys enjoyed this video. Again, it's a little different. There wasn't too much on my radar this week, but I think this was a pretty cool training lesson. It's about 30 minutes long, so I hope you stuck in there. And again, if you like what you see, guys, do me a favor, leave a comment under this video, hit that like button, and of course, share this. We're trying to reach 100,000 subscribers by June. That's the goal, and I need your help to make that happen. So get out there. If you have a trading buddy, share this video. Say, hey, good stuff. You need to watch these guys. Of course, only if you believe that. So I'll see you guys, I guess, later this week in the market, 12 weekers or transformation members, 12 weekers and ultimate transformation members. I'll see you guys tomorrow for our private Q&A session. Live room members, I will see you on Tuesday. Syndicate members, I'll see you whenever the next trading opportunity arrives. And for the rest of you, I'll see you during the week with my trading blog video. And of course, next Sunday, maybe Jason Greystone, I have to talk to him about that. But next Sunday, there might be a Forex market preview up by another trader since I'll be out of town. But I'll talk to Greystone about that and see if he can help me out there. So until then, plan your trade your plan. Take care.